Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today we are going to cover Foot Locker out of the consumer discretionary sector. They are a retailer. If you're an old school guy like me, you might remember going back to the malls back in the day. Foot Locker was always one that we kind of walked in to see what the new sneakers were that were out. I remember whenever Air Jordans come out, and then it was pretty much every time there was a new Air Jordan coming out, people were rushing to the Foot Locker to pick up their new Air Jordans. It is March 13th, start of a brand new week. Hopefully everyone's week is off to a great start. Hopefully you are not in the banking sector. A lot of red in that sector with the failure of the bank last week out at Silicon Valley Bank there, and then the recent failure, I think it was yesterday or this morning, of Signature Bank. Obviously the banking sector would have been an easy one, but like I said, we're going to look at Foot Locker instead. Who we are, Foot Locker leads the celebration of sneaker and youth culture around the globe through a portfolio of brands including Foot Locker, Kids Foot Locker, Champ Sports, Atmos, and WSS, with approximately 2,800 retail stores in 28 countries across North America, Europe, Asia, Australia, and New Zealand. You can pause and read the rest of it here if you want to go further. What I'd like to highlight here is they have a store presence across the globe as well as a online presence, right? So they do cater to not just only the American market, but a market around the globe. So whenever one market is kind of doing slow, hopefully another market is doing well, right? And they have your typical brands you're probably aware of: Adidas, Nike, Air Jordans, which is part of Nike, New Balance, Hoka, Puma, right? And as well as clothing accessories, a lot of workout clothing, that sort of thing. So you're probably familiar with them. If you want to know more about them, check them out, www.footlocker.com. That is their homepage where I pulled this information from. We are talking about Foot Locker, ticker FL, consumer discretionary sector. And the reason we are looking at them, they were down 6.67% on the day, closed out the day at $40.02, 52-week range, as low as $23.85, as high as $47.22. So even though they dropped 6% today, they are still off of their 52-week low there. Would love to see them back under $30 per share again. $25, $26 per share would be a great buy there. Average volume 2.1 million. Today was 3.2. So it looks like a lot of selling right at the end of the day, really. Kind of a little bit of selling in the morning, a little flat throughout the day, and then a sell-off to close out the day. Market cap of 3.735 billion. A beta of 1.23, so they are more volatile than the overall market. Low PE ratio, 9.24. Earnings per share, EPS, is sitting at $4.33. Earnings date, the next one is coming up pretty soon on March 20th. Forward dividend is $1.60 paid out in the year. They are a quarterly payer. We'll see that here in a moment. Nice dividend yield at 3.63%. But obviously, if you could get them back here closer to this 52-week low, that would be a higher dividend yield and a better buying opportunity, in my opinion. Ex-dividend date is coming up April 13th. So buy them the day before, so at least April 12th or before that, to be able to get the next dividend. And a one-year target estimate, at least according to Yahoo Finance, where I pulled this information, not affiliated, just one of the sources I like to look at. They have a target of $42.63 per share, so speaks to some potential upside appreciation. Now, I always recommend more than one site for information, just to make sure the information you are getting is accurate. Another one I like is stockanalysis.com. Go ahead and pick your own choices. There's a lot of them out there. Seeking Alpha seems to be one that people like as well. I'm not affiliated with stockanalysis.com, but the 31 stock analysts, they've had to take a look at it. Call it a consensus buy, though it is right there on the edge of the hold and buy. This would be hold, this would be a sell, right? Buy. And their low estimate is $32.32. So again, back in the 30s was where they see it heading over the next year. And I would love it back in the 30s, right? And that would be a 19.24% decrease in the stock price. Average price, pretty close to what we saw, their average estimate here, what we saw from Yahoo Finance on the previous page at $43.48. That would be an 8.65% increase. And if it happened to hit their high, $65.10, that would be a 62.67% increase. All the while, you'd be collecting that 3.6% plus dividend yield. Now, like I said, they are a quarterly payer. They do pay out 40 cents per share per quarter. Their payout ratio is pretty low, 33.4%, and their dividend growth is extremely high, 60% dividend growth. Very nice to see that fast of growth. You can see here, last January in 2022, they were paying 30 cents. They bumped that up in April 2022 at 40 cents. paid out the rest of the year and here in January of 40 cents. So they should be, if they're going to do another dividend raise, probably one coming up here, if not on their next payout, the following. So look for a increase in the payout again to see if it matches it. That's a pretty extreme growth right there. Not saying they're going to match that, but maybe they do something a little smaller. But their last one was around 60%. So very nice to see. Low payout ratio, nice dividend growth. You want to obviously get in their books. Anytime you look at a retailer, you want to see how they're doing from quarter to quarter, see if sales are declining, especially as we enter into a recessionary period. A lot of times these companies, their sales will decline. So this one, in my opinion, I would like it around the $30 or even back close to that 52-week low, just because I believe we are going to be in a prolonged pullback. And a lot of these companies that sell goods like shoes, where people can, discretionary goods, where people can back off. I don't necessarily need a new pair of shoes. I might just want a new pair of shoes. They'll back off on those wants to focus on the needs. So consumer discretionary is one that I would look at for some deals over the next, let's say, 6 months to 9 months. Right now, this would not be a buy for me. I would wait for it to drop back closer to its 52-week low, if not set a new 52-week low. Well, that is really it on this one. Really appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. Hopefully, you're on your own journey as well. I do have a Webull link if you do not have a brokerage account yet and wanted to get one started. If you use that link, deposit some money in the account, you'll get some free stocks. I'll get some free stocks. It is a way to help out the channel. But doing all that other stuff, hitting that thumbs up, hitting the notification bell, hitting the subscribe button down below, and dropping a comment down below, letting me know what you think of the videos. Are you a sneakerhead? What sneakers do you like? Let me know that all down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. Or if you know other dividend investors out there who might be interested, or Foot Locker fans who might be interested in a video like this, go ahead and share the video with them. Get the word out. We are all about financial freedom here and on trying to share our journey along the way to financial freedom. Hopefully it helps someone out there in their journey as well. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, really appreciate you stopping by. Hope to see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. Can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice of counsel of a certified financial advisor. Thanks for stopping by.